Hi, my dear friends. Welcome to Finvest Talks. Today, I'm going to talk about irregular income earners. See, basically, during this Diwali season, we are seeing a lot of irregular income businesses popping up, and they are doing a very good business. Not only for this Diwali, for any festival, and New Year, Pongal kind of a thing in down south. This irregular income business are thriving. So it's part of a last mile of economy, you can say, where even the small time sweet shop owners, then government shop, small altering tailors, then full time tailors. So these are all the various businesses related to this festival. Say for Diwali, so instantaneous cracker shops mushing up every corner of city. So these are all the seasonal business. Come next what, New Year and Christmas, you can find a lot of gift shops coming up, lot of government shop coming up, and then cake shops will do very good business. So these are all the seasonal business. So such kind of people will not have a regular income. So irregular income based on the seasonal business. For them, financial planning is very difficult. So today I'm going to concentrate financial planning for irregular income. So let's go into detail in this. Please stay till end of video. Please subscribe, comment and share. Friends, let us quickly see financial planning for irregular income. Before going to that, we will understand once again what all the financial irregular income businesses are. Understanding irregular means common professions are tailors, that is those who are stitching for Diwali or for school uniform. They get a chunk of income only during that school time or festival time. And then government shops, can say small government shop. I'm not talking about the very big Reliance Trends or somebody who is a very big retail store. So small time owners. And in down south, you can see a lot of such shops in and around the small towns. And then Diwali sweet producers, then income tax practitioners also. During the tax season, they will be getting very good business. Thereafter, their business will be lulled. And then for those who are selling crackers, so they also get some kind of business. Even for many people, those who are involved in this kind of a cake shops, as I said earlier. So challenges are inconsistent cash flow, difficulty in saving. So for them, savings becomes kind of a burden because they would have taken money from the lenders, they would have borrowed some money for the business, and then they would have to pay for their laborers and then keep something for them, and uncertain planning of the future. Then they will be waiting for, yes, next business, let us go for the Christmas one or Pongal, so kind of a thing. So in between there will be a lull between March to April, July. So again there will be good business. So that is a kind of uncertain planning for the future, makes them very difficult for financial planning. So for them, how to build an financial planning? Number one thing is that you have to encourage yourself. If you are an agent, if you are if you are having irregular income, so it is essential to make an emergency fund. Emergency fund means 3 to 6 months of essential expenses for your family. So that is very important. Whenever you get a windfall business, whenever you are getting a very good business, that time you have to reduce your spending, but save for the 3 to 6 months. So set aside a part of seasonal income, like from Diwali or Christmas or Pongal or during the school opening season. So save that amount for the 3 to 6 months of time. That will be very important. That is building emergency fund. And then budgeting for the high and low seasons. Create a dual budgets. So high income budget, season budget, you will have to take care of your family. So how you are going to be at par with the other regular income earners. So plan for the low income season, you have to plan for the off seasons. Off season, will you plan? You have to take money from the savings. Then keep the standard of living. So you have to live below your means. I'm not saying that to bring down your standard of living, but to keep up the standard of living, you have to live below your means even during the season time also. Then practical tips cover essential expenses, save extra income during peak season to cover the lean months. So whenever you are getting less income, you have to cover for it. And then harness endowment plans for security. My dear friends, so those who are having a irregular income, so for them this endowment plans, no, those who are saying that yes, you go for a term insurance, everything, that's fine. But this guaranteed, some of the plans are guaranteed plans like Jivan Utsav, Jivan Umang, kind of a plans are guaranteed plans. Anyway, you are in this business for so many years, you are not going to go away from this business. It means that you will have to take care of your family for the guaranteed events like a child marriage, education, everything guaranteed events are going to happen. For that guaranteed returns are running. Even though if it is going to give less returns, to plan for this guaranteed plans and perfect for irregular income. So how it works, supposing if you are taking a one Jivan Utsav plan or any Jivan Umang plan, it will keep on giving money after certain period. Say for Jivan Utsav, you will have to pay only for 5 years. So during seasonal time, take it as an annual premium plan, then pay for 5 years. So once the policy term over, that is up to 11 years minimum, thereafter on that particular year, every year you will be getting 10% of that sum assured throughout the lifetime. So it alleviates their irregularity. Then money keeps coming to the bank, irrespective of any changes. See, if you go into the future, there will be a lot of things get automated. See, the cloth which I am wearing, it is ready-made shop. I bought it from ready-made shop. It's not from the tailor. So though the tailor is getting the business indirectly, but directly getting cloth and then getting it stitched from the tailor, gone are those days. So similarly, making sweets or making anything goes to outsourced. See, mostly we are purchasing from the shops. So making at home also has come down. So similarly, in future also there is going to be a lot of changes may come. So in that case, to alleviate that one, these guaranteed returns will take care of this needs, guaranteed needs. So it is perfect for this one. This irregular income earners. So it gives a regular income as well as the protection for the family. Then encourage saving discipline. Regular contribution building funds savings gradually increases security of the family. Supposing it also helps you to take loans. My dear friends, you can take loan after 2 years of payment. Nowadays, the new IRD circular enables you to take in the second year itself. So, if you got a endowment plan, it helps you to take loans at a rate without any collateral. You have to keep your policy bond as a pledged in your insurance company. You can take loans. So there is no processing fee or something like that. Liquidity is more. You can take this endowment plans. You can use it optimally, my dear friends. So in case of anything during the lean season, after 2 or 3 years, you can always take loans. And then making the most of the seasonal earnings. Smart allocation tips. So a safe portion of, I am not telling put everything into endowment plan, my dear friends. You can also save in the other instruments like a liquid fund. Liquid fund is basically, it is a mutual fund. It gives more than the savings bank account, but liquidity is more. So if somebody saves money in liquid fund, they can take out money immediately. It means that in T+2 days, it will come to your bank account. Or you can keep it in savings bank account also. Invest in extra earnings in low risk and high growth options. Low risk, high growth means what? So as I said, liquid funds are very good one. Even if you find some other funds like a hybrid fund or balance fund, you can invest. You can also invest in ULIPs. So which is also giving a tax efficient when compared to other instrument. And Diwali strategy not particularly one festival, my dear friends. It is for the all festival. Divide earnings into, so whenever you are making Diwali kind of a big festival, here you make a big amount of money during being a seasonal earner and put it into emergency fund. Whenever there is a big earning, windfall comes, put it to increase your emergency fund, and then make investments, a little bit of amount to equity, and then spending buckets. You put it in the essential spending buckets. So you have to allocate a lot of investment strategy as well as See, there is a 50-30-20 rule. You can apply it. There is a asset allocation calculator. There is a video is popping up. If you are interested, go on. You can go and watch that. So put in the spending buckets. That is needs buckets, wants buckets. So you can spend how much you are going to spend for the need. 30% for the need, 20% for the wants, then 50% you can. 50% for the needs, 30% for the wants, and 20% for the investment or savings you can do. Within the 20%, 10% for the short term, 10% for the long term. So such kind of a investment, if you make it in a different way, so definitely you will be taken care of. And tax benefit and peace of mind. So tax efficiency, my dear friends, during season, one person irregular income earning huge amount of money. He spends and then distributes every money to his labor and everyone. And then the taxman knocks in. Yes, you have made a huge amount of money during that season. You are not paid tax. So my dear friends, the investments what you are making should also be tax efficient. These endowment plans it gives you ATC as well as 1010D benefits, my dear friends. So use seasonal bonuses to fund tax saving investments, securing both growth and tax relief. Conclusion, make irregular income work for you. So what is the summary? Number one, build an emergency fund, set seasonal budgets. Budget means low off-season budget and then on-season budget. Live below your means and then allocate needs and wants. Right? Needs means, again I'll tell you, follow this 50-30-20 rule. 50% for needs, 30% for wants, 20% for the savings. And then use endowment plans for the security, because it allows you to have risk cover as well as you can also take loan whenever you need. And leverage the tax savings. So you can go for the ULIP plans or any other plans where you can leverage the tax saving options through ATC and ATD also. Next steps, if you are a customer, begin planning now for secure future. If you are not aware how to do that, you can always contact our advisors. For agents, help client with these strategies for irregular income. So thank you, my dear friends. Thanks for watching. If you like this video, please subscribe, comment and share. Thank you. Bye bye.